Hey guys, Kyle here. In this video, I'm going to walk you guys through a setup I took on Target after they reported better than expected earnings on a consolidation break that had a well-defined risk to get involved. This is from May 19th, 2021. It's a flag on Target. You know, it's a consolidation break. They had really good earnings, and that's why I was in play on this day. So the game plan coming into the day, I was talking over with this setup with a few other guys on the team that I'm working with, and we were simply looking to see if this would tighten up and maybe flag out on the day after building a solid base. For me, I was either looking for a 1-5 15-minute flag break where it's setting up on those time frames, or a 1-5 15 hourly. It ended up being a little bit extended on the hourly, but that's okay. Still setting up really nicely, and it was nice and tight. Gave me a solid risk to reward level, and I had a 15-minute level to risk off of. And if we got below it, the idea was dead, and that was okay. So you could kind of see, the game plan below. The timing point was this 216.25, and we'll go over that. Risking off 214.93. So basically $1.30 of risk, and really good R multiples if this wanted to open up. And it had the possibility to turn into a swing. So this was a day that we came into the morning, and a lot of the crypto names actually tanked overnight, and many of them were down greater than or equal to 30%. So a lot of eyes were in the crypto market. But this is aside from that. One thing to note we like to look at is VIX, and the low to high on the day was 21.88 to 25. And anytime VIX is kind of holding over 20, I really want to see if I can hold things a little bit longer, because volatility has picked up, and sometimes we get some outsized moves. So the fundamentals of Target, they had earnings in pre-market, better than expected Q1 EPS and sales results. They blew out their numbers. Same day services rose more than 90%. So really good earnings. A few upgrades as well. It was really in play on this day. So the daily volume on this day the typical volume on Target is around 3.77 million. Our vol on this day was 3.7. So for something like Target, that's telling you this is certainly in play on this given day. And of course, it had a lot to do with earnings. ATR, how far this stock typically moves, is about 4.5 points. So you could kind of use it as a target, but with our vol over 3, you could kind of look for maybe a little bit more than that, maybe 2 ATRs, maybe 3 ATRs. It all kind of just depends on how the stock is flowing on that given day. So the short float, very low, only 1.3%. So not that many people are stuck short. Who really wants to be short Target? It's a great company. They're doing very well. The stock is breaking out. And the float on this is 500 million. Very high institutional ownership, 82%. And typically on day one, earnings, you really want to see what institutions are doing. Are they buying at the open? Are they selling? Are they not really doing anything? And to me, it looked like there was some institutional participation on this given day. So it looked like there was a possibility that, this day it could actually go, instead of, maybe needing a day of rest, and for institutions to kind of talk over how the earnings went and everything. So the long term on Target, the daily right here, it was at 52-week highs, breaking out on the daily from great earnings on elevated R-vol. You can kind of see it's been building some higher lows, but kind of consolidating for the last couple months. And then we broke over that from the earnings.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So this is the setup that actually got me involved. You could kind of see we had that opening push, we pull back in, get nice and tight, spend, looks like an hour or so of consolidation, of, going sideways, consolidating, getting nice and tight. And that's what I'm always looking for. I want to see a level where a stock gets nice and tight and I have a level to risk off of. And if we break out of that level, out of that flag or that consolidation, the theory is if you think people are, stuck short on the day, they're probably risking off that level or those lower highs right above. And, you should start to see them paying, covering on the offer. So, lifting the offer as well as, longs who like this idea. They're probably taking it around this level as well. So what you really want to see is if you're playing a timing point like this, a flag break or a consolidation break, you want to see the stock push away from price rather quickly, and you want to see it on volume. And we do see some volume come in. Of course, would have liked it to, push away a little bit quicker and with a little bit more volume, but we do see, volume start to pick up.
What are the time frames for each of those charts?
Yeah, so the one on the left is the 1 minute, the 5 minute on the right, 15-minute bottom left, and then the hourly on the bottom right.
Okay, and so for this trade, you want to see all of those time frames setting up tightly?
Ideally. Now, it was a little bit extended on the hourly, you can see. That blue line is the 9 EMA, and that's kind of how I determine or get a good feel if something needs to spend a little bit more time. And you could kind of see the hourly bottom right was a little bit extended, but a 1-5-15-minute flag is still a setup for me that, I'm happy to take.
The title of the presentation, though, is 1-5-15, right?
Yeah, flag break.
And that was your game planning?
Yeah.
For the open?
Yeah.
So is the hourly setting up tightly super important, or is that just sort of?
Yeah, so after 1 p.m., I don't want to be taking only a 1-5-15-minute flag break. I want it to also be setting up on the hourly. Earlier in the day, I will take this setup. It doesn't have to be as tight on the hourly, but if it can, that's even better. More market participants. So we could kind of see that that box right there is day one where I got involved. Now, I was out of it by the end of the day, but this is something that down the road and something that I'm working on with someone who I have an account with. We're working on some of these bigger ideas, maybe covering risk, and then, something like this where it has great earnings. It's above.
You can just give me the initials. Who is the person you're working with?
Tim.
Okay, that's the full name.
Yeah, I know, but I don't think he cares.
Gotcha.
So yeah, something like this that has great earnings, above 52-week highs, nice and tight risk, and you could cover some risk. This is something that we're looking to swing down the road.
So just an idea. We do not talk about this very much, but might be interesting for initials TIM also to take a look at. So we get a ton of research here.
Yeah.
And when you're game planning before the open for a very specific trade, it might make sense for one of you to just sort of take a look at some of the notes that are coming in on these particular stocks, on this particular stock, and see if there's some research that could drive this or have some added ammunition behind your thesis. I'm not suggesting to dive really, really deep into the fundamentals or not, but it would be interesting to note that. I actually think initials TIM.
Yeah, he loves to dive into it.
Would find that interesting, and
sure.
you might say, hey, you seeing anything in the research that can help us, and then you can say, hey, the technicals are setting up.
Yeah, I will say I think that's why we do fit well together. He comes into the day with a lot of fundamental analysis, and he'll tell me why he thinks this stock is in play.
Then he should do his part. He should be like initials TIM.
Yeah.
What do we got?
Yeah, this was actually kind of prior to us forming that account, but we did talk about this idea prior.
Good.
This was a setup in my playbook. It had great earnings, high institutional ownership, elevated RVOL, definitely in play over three times its typical volume. The risk to reward on the day was, greater than or equal to 3-1. Anything under that, I really don't want to really be messing with. And of course, if you're looking at this at a higher time frame, over a course of multiple days, if you're playing for that bigger move, definitely 10 to 1 is realistic with, some levels we had in mind. There's a clear level where I'm wrong. Out of all of this, that's probably always the most important for me. I want to know exactly where I'm wrong. Worst case scenario, that's where my hard stop goes. But of course, more times than not, there's an exit prior to that full 1R loss.
Yeah. And so we're in a different regime. In a different regime, retail has done very, very well.
Yeah.
Retail is one of the places where big money is putting capital behind for the reopening.
Yeah.
And so that's something to be thinking about as well, which is, hey, this is in a sector that's getting big money behind it. And that might be a variable for you to be thinking about. It's a strong sector.
Yeah, for sure. I agree with that. And then the final one is that there's a clear level where, shorts on this given day are wrong and likely will cut. And that ends up kind of being my timing point, that consolidation break, that lower high break. That's where it looked like a lot of shorts were probably going to be risking off of. And, we did end up seeing that when it did break that timing point. The tape was speeding up, so that kind of indicates that maybe some longs are hopping in and some shorts are covering up. So you can kind of see right here, we'll start with the bottom right, is, we kind of wick down a little bit. And at this point, I'm thinking, it's kind of hard to see that wick a little bit, but, we wicked through 215, and at that point it actually looks like the idea is not going to set up, and it's just not going to set up for me on this given day. But then we reclaim, and I was actually able to take half of my position right there, get some better prices. That's something I'm kind of working on with my team, or with the team I'm working with, I should say. Is getting some better prices, and maybe your win rate's going to be a little bit lower, but you don't have to get full size there. You can take something. In this case, I took half of what I wanted. And I'm risking off that wick low. And then we kind of tighten up a little bit. I probably should have, been showing a 5-minute or a 15-minute here, but this is a 1-minute. We end up tightening up and flagging out, and that's where I add the rest. And that's where I think, shorts are probably hitting out, and you do kind of see some volume come in, and that candle really expands a bit. So what I'm typically doing is on my first reason to sell, that can be a target I have in mind, or, some reason that comes up. Maybe there's a stop or a higher time frame breakdown, on this given day, like a 5-minute or a 15-minute, typically selling half to cover risk. And then I really want to see that second half work out in my favor. Typically splitting that second half into 3 even lots or 4 even lots, something like that. Now in this case, I get that first reason to sell, I sell half. Now we kind of push again and we stuff a little bit, so I sell another third of my second half. And then we kind of break down again, and there's, in that same candle, I actually end up selling another third. So then we pull back in and we start to consolidate sideways. And this is, again, another thing I'm working on as well, is adding back to that position. If I'm going to stay in it, I still have conviction behind it, and if it kind of builds a higher low and it sets up again, well, I want to add something back. I don't have to double up, I don't have to get out of hand, but even adding a third back or 2/3 back, that's something I'm certainly working on, and often you'll get a new level to risk off of. So you can kind of see, I throw some bids out there, I throw a couple offers out there, and I believe I add back a third of what I sold, from my second half. So I'm not overly big, but I add something back. And now all of my risk is off that higher low right there. And then we kind of start to build, some higher lows again. We start to grind higher, and we run into some problems again up by 217. And I sell half right there. And then we kind of end up breaking a 15-minute level, and that's where I end up getting flat. You can kind of see I do end up puking kind of the remainder of my shares. But if I'm thinking, bigger idea down the road, especially with that account that we now have, this final piece is something that we could definitely swing.
So, a couple things. So do you see where we break out?
Yeah.
We break out above the flag?
Yeah.
All right, so things that we want to see increased volume.
Yeah.
And we want to see it move away from price a bunch. I don't know that we really see that relative to probably the best trades
Yeah.
that flag and break out.
I agree.
That's going to get me to be a little bit more cautious when we
Okay.
pull in. But point two is, if there is institutional participation and this is going to be clean and this is going to go for a couple of days, when that actually pulls in to the level it broke out from, there should be buying there.
Yeah.
And it should be relatively clean. And we actually do see that part.
Yeah, we do see that.
So I'd love to see more volume. I'd love to see it move away from price better.
Yeah.
But I do like the fact that it's holding above that area that it broke out from.
Yeah, I do as well. And we actually kind of wicked down a little bit a few times, and you could see that someone is bidding for some prices and, you know, holding this up. And exactly, we pull into that kind of breakout zone that maybe didn't do the volume that we would have liked to see. But again, you know, we hold, build some higher lows, and then we're kind of off to the races. And this is something that, again, definitely does end up grinding higher over the next few days. And that is, you know, the area of improvement that I can work on. So I don't have the tape, but there was a moment before this setup for the long that it looked like it could roll over, and people started slamming the bids only for it to reclaim and have offers lift rather quickly. So, you know, we kind of wicked down. I think it's not going to set up. You know, some people maybe had a long idea that they were waiting for, and then all of a sudden it looks like it's going to break down. So maybe they hit in short, kind of looked like that on the bids. But instead, we wick right back up, and that's actually where I ended up taking half of my position.
Yeah, and just highlighting, that is a key signal from reading the tape, a setup like that. You think it's going to break down, it doesn't, it comes back, reclaims the level.
Yeah.
That's a see it moment from your reading the tape skills.
Yeah, I agree with that. And there was actually a point where I was like, is this a short right here? And then I was kind of looking at it. I was looking at where I was risking, where I thought it could go. And with great earnings, the risk to reward really didn't make sense to me. But yeah, we ended up wicking right back up and then end up, you know, flagging out on elevated volume. You know, again, we could have saw a little bit more volume. And we pushed away from price, indicating that, you know, the ideal was more than likely going to work. And I had some good prices where, you know, I was in a good position of comfort on it. We then pull in and hold that 215.86.
Yeah, I just want one more point about this. I actually think that's something you might think about for a tag. So I don't know if you want to call that the failed wick. I don't know if you want to call that a see it moment from your reading the tape. Probably better to sort of call it I think the wick part, the failed breakdown part.
Failed breakdown,
that's worth tagging. In my sense, in measuring that. And seeing if you want to put on a little bit more risk when you see something like that for setups like this. Because I think that variable to it makes you want to put on more risk than others. And my sense is measuring that will give you some good information for your trading.
Yeah, that's something I'll definitely do, and easy to do with, you know, the software we use. But again, then we pull in and hold that 215.80 level where I'm able to add back and, you know, double back up. I guess I ended up doubling back up, but again, my cost basis was still above that higher low I was using. And we begin to break out, and, you know, basically I'm in a risk-free position. Where I'm risking is basically where my cost basis is. And again, this is something I'm always working on, adding back to a position when it holds up and, you know, it sets up again. So again, I do like how I saw the position beginning to develop and took, you know, about half size when we do wick down and then wick up, back up. So, you know, I'm happy I did that. That's not something that I used to do, but again, with working with a few guys, they said, why not get better prices, you know? So that's something where you can improve, you know, the reward on this position. So that's something, you know, I'm happy I did. I like the way I was aggressive with my first half and left a third on of my final half and added back to the position when it, you know, held a new higher low that I could see, that I could risk off of. It was almost like I T-WOPed back into the position, but, you know, I didn't. I was just throwing out some bids as it was holding up, but that is something that I could, you know, consider maybe just T-WOPing back into it a bit. And that's kind of an algorithm that we have that we could kind of throw out some orders over a period of time. So that's something I've messed with in the past. An area of improvement is with holding my final third of my second half. It's not a lot of size relative to what the position was, but I can hold it for a swing as it closed in the top 25% or 20% of the move on the day. It had great earnings, high institutional ownership, and it was on elevated volume of over 3. So this can result in a really nice day 2, day 3, day 4, and so on. So again, this is something that Tim and myself are working on with an account that we have together. And today, the stock has pushed all the way up to 228. So there was definitely room to kind of make a little bit more on this position with riding out part of it as a swing. But yeah, that's about it.
Yeah, I like the idea of thinking about this longer term as well. And you can trade your personal account and have certain strategies, and then initials TIM, and you can be working on this. I don't want to give them away.
I think I did.
You guys can be working on that for a different trade together. So that's really good. While we have you here, thanks for doing that. But while we have you here, I know you're working on one thing in particular with Dr. Steenbarger. In a couple minutes, you might share, if you would, what you're working on. Yeah,
so right now I will say that my main focus, after a little bit of a bigger loss than I wanted to take, just being completely honest with that earlier this month, is focusing on my playbook and only my playbook, and putting on risk, or when I'm thinking through new setups, only putting on up to 5% of my daily stop on those setups that are kind of outside of my playbook, or even, just thinking about them after the close. So really focusing on my playbook right now is.
And how are you doing that specifically?
Well, it's a main focus, and every day we have this daily report card that we're doing, and I'm sending to you and Dr. S on whether or not I focused on my playbook, and that's the number one question at the top, and that's what I have to answer every day.
Okay. So you're working on that and you're giving yourself a grade?
Yeah.
Good. All right. So a good example there of how you slow down a little bit, focus on one thing intensively, give yourself a grade for something, and make some progress. Okay, good. Questions from you guys?
Can you explain what TWAP is? A little more in depth.
It's like an algorithm, basically, where you can get the average price over a period of time. So say you want to get back in, you want to get the price within the last hour, you can set it for an hour. So yeah, it's a little bit confusing, but basically, if you want to get filled, if I wanted to TWAP in for 30 minutes, I can get the average price. So that's what I could have done, set it and forget it, and then it'll slowly work my way back into that position.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next, and what you found helpful from this video. From all of us at S&B, train and trade well.